Welcome. Thank you for tuning in today. Today's webinar is on financing a home. I'm ReShawna Leaven, Realtor with KW United, serving Northern Virginia, Maryland, and DC. So today's agenda, I'll talk a little bit about me, steps to financing a home, finding a program, talking about the pre-approval process, underwriting, and closing. So about me, I have been in real estate for 2 decades, serving clients throughout the DMV area, and I am now a published author. The cost to close: 55% of my business is buyers and 45% of my business is sellers. I've seen all types of markets, and I felt that this video was important to put out because a lot of people don't know the back end of what goes on when they're actually purchasing a home. You don't know it until you go through it. So this is just to shed some light about what to expect once you get in the process. So, steps to financing a home. I would recommend that you get a basic knowledge of what type of program that you are looking for. And so the first step to that is, I would say that you need to figure out, well, how much money do you have? I'm going to go into detail more about that. But you can't figure out what program you need to go into because you need to know how much do you have. Do you have 5,000? Do you have 50,000? Do you have 100,000? So you have to start from there. How much do you have to actually work with your home purchase? And that includes down payments and your closing costs totals. So are you planning on buying the interest rate down? So all of those different things. So your realtor can assist you and your loan officer can assist you with that. So once you find the program, then you find the lender, because not all programs are available with every lender. So most of the time, banks have special programs that other not associations, but other brokers don't have, vice versa. So if you go to one location, they may not offer the other program. So just keep that in mind. And so after you get your approval, then you go through underwriting and then you go through closing. So that's a simple version of what happens. So now we're going to go deeper into each one of these. So finding a program. So there are several different types of loan programs out there. So you have conventional. And so typically for conventional, for 3% down payment for first-time home buyers. If you're a repeat buyer, that's 5% down. And there is PMI that's attached to that, which is private mortgage insurance. Credit score is a 640, and the loan limit is going to depend on the county loan limit. Then next you have FHA, which is the Federal Housing Administration. So that required down payment is 3.5% of the sales price. Private mortgage insurance is required for the life of the loan. Minimum credit score is actually a 580. So that's good to know. Based on the county is the loan limits. VA, there is no down payment required. There's no PMI, and the credit score could be as low as a 580. And USDA, there is no down payment required. There is PMI required, is slightly less than FHA. 580 is a credit score minimum based on county. And for USDA loans, you have to purchase in what they consider a rural area. And keep in mind, with all of these programs, this is just the basics. So you can there are programs available that are 100% that are conventional. There are which cover the down payment. There are programs available for FHA that cover the down payment. So credit scores. So you need to understand credit. So many times consumers think that what they see online is their FICO score that the mortgage lender is looking at. No, that is what's considered a Vantage score. So a Vantage score is, I would call it a snapshot of what your FICO score is. Sometimes it's close to being correct, but it's usually never spot on correct. So it could be significantly off. You may be thinking, oh, I have a 720. But then when the lender pulls your credit, well, you really only have like a 670. So don't get too caught up on that. So it gives you kind of like a gauge of where you are. So there's three bureaus. Credit bureaus are Experian, Equifax, and TransUnion. And so all of those scores can vary. And so the lender is going to use the middle score. So say you have a 700, then you have a 710, and then you have a 680. So the 680 would be the middle score. They don't average the score. So that's the score they're going to use to qualify you with. So fixed rate versus adjustable rate mortgages, or what they call ARMs for short. So you will have an interest rate along with your APR. So a fixed rate is fixed for the life of the loan, and an adjustable rate is going to change based on what's going on in the market. So it could adjust slightly depending on what your loan terms are. So you could have what they call they have a fixed term for 1 year, and it may increase for 2 years and then be fixed. So just be aware of what that loan terms is and make sure you understand that before you sign on the dotted line. So mortgage payment. So what's included in a mortgage payment? So I have this little diagram here. So PITI. So the P is for principal, the I is for interest, T is for taxes, and the last I is for insurance. And if you have mortgage insurance requirement or PMI required in your loan, that's going to be on top of the mortgage payment as far as the lender qualifying you. And if the home is in a HOA or condo, sometimes you have both. So that all of those things combined is what the lender is considering your mortgage payment or your mortgage obligation. So keep that in mind and say, oh, well, the mortgage is only $1,800, but then your condo fees are $550. So in the lender's mind, that's going to be $2,350. Had to do my math, sorry. I'm trying to do this on the fly. So keep that in mind. So first time home buyer. So a lot of people really don't understand what this means. This could mean, okay, I have never purchased a home, so I am a first time home buyer. It could also mean I had a home that I sold in 2000, and today it is 2025, and I have been renting for the past 25 years. So I am considered a first-time home buyer again. So the timeline doesn't really matter in between. Well, it does. It does. For down payment assistance programs, you have to be 3 years. I just use the long term. But there's a lot of programs that it doesn't matter whether you've sold your home yesterday or you sold it 3 years ago. So it's a lot of programs available. You just have to have the right team and someone that actually has the knowledge of what those programs are to get you in a home if that is what you desire. So what are the different types of down payment programs? So this is not all of them, but these are the top programs in the Washington metro area. So for DC, there's DC Open Doors. The credit score is at 640. The income restriction is going to be based on the county. You can be a first-time home buyer or repeat buyer. In Maryland, there's the Maryland Mortgage Program. You have to have a 640. The income restriction is based on the county, and depending on where the property is located, it was in a certain census tract, you can be a repeat buyer to actually use the program. And finally, Virginia. So Virginia Housing, formerly VHDA, that's what their name used to be. And minimum credit score is a 640. Income restriction is going to be based on county and is for first-time home buyers. So pre-approval, what is the pre-approval process? So a pre-approval is not the same thing as a pre-qualification. So it's very important to have a pre-approval letter to submit with an offer. A seller is not going to entertain a contract without a pre-approval letter because you haven't shown that you've actually gone through the process, you've gotten your credit checks, you've verified assets, that you actually can purchase their home. Doesn't matter whether you're buying a $200,000 home or you're buying $1 million home. It needs to make sense. And really, you shouldn't be looking at houses anyway unless you have your pre-approval letter. So you want to be able to have a strong contract. And that means you need to have a strong lender as well. I would not recommend going online because it's just not a good way to have a strong lender. It's better to go with a local lender that somebody can call, not you calling some 1-800 number and they put you in a queue. But if we work together, we will talk about that. So getting pre-approved, what do you need? What do you need? Is all these documents on this page. So you got to identify who you are. So you need a driver's license, social security number, your current address. For housing history, you're going to need your last 2 years of residences. And if you've moved a couple times, you're going to need the year prior to that. You'll need landlord names and addresses for the last 2 years. You will need a mortgage statement if you currently own a home or previously. So basically, if you weren't renting a home and you had owned previously, you'll need that. Income history, pay stubs, last 2 months, W-2 tax returns for 2 years. If you're self-employed, you will need the last 2 years, and you will need your bank account statements for the last 2 months. So think 2, 2, 2, 2. Anything you need in twos. Underwriting. It's nothing until the underwriter gives its stamp for approval. So keep in mind, the pre-approval is not a commitment for the lender to fund your mortgage loan. It is just basically a stamp saying that, okay, based on what you have told us, we haven't yet verified everything, that it looks like you are a great candidate to get this home loan. But the underwriter is the person that looks at your loan documents with a fine-tooth comb. So I mean, they're looking at every sheet of paper, every line, every detail. So if on your bank statement you've had an insufficient fund, they're going to look at that. That might be an issue. So they're going to look at, okay, you've had, you keep getting revolving credit, you've got some affirm, you have a lot of different things. So keep that in mind. Until you get the clear to close from the underwriter, you are not going to close. And if you don't have your final closing disclosure, you are not going to close on your loan. So don't pack and get the moving truck until you get that. So funds needed to buy a home. So how much do you need to buy a home? So you need your earnest money deposit. If it is a competitive market, which we have been in a competitive market, what is on the sheet is just a guide. So you may need more money, but this is just a summary of what you may need to guide you through the process. So 1% of the sales price. When is this due? It's due after your contract has been accepted. This cannot be borrowed. This must be your own money. You can't get this money from a credit card. So, because you don't want to use any new credit and you don't want to borrow this. This money has to be sourced and seasoned that it actually came from you. Home inspection. Depends on the size of the house, but about $650 is due on the day of the inspection. If you're going to get a radon inspection, that's $200 is due on the day of inspection. Termite inspections up to $60. Day of inspection is when it's due. Appraisal up to $700. Depends on the size of the house. If it's a larger house, the funds could be more, but that's on average about how much it would be. Before appraisal is ordered by your lender, so that money is going to be due. Credit report, it depends. You have to ask your lender for that information. That's going to be on your closing costs. Condo questionnaire, if you're buying a condo, it could be up to $350. It is due when it's ordered by your lender. Down payment could be up to 20%. That's due on closing day. Closing costs up to 4%. That is due on closing day. And closing. So what do you need to bring and what to expect? So your buyer's agent will accompany you at your closing, hopefully. If it's me, I will be there. You would bring your identification. Make sure your driver's license is not expired. You cannot close on a home with an expired identification, whether that's a passport, whether it's a driver's license. Really, you shouldn't be driving if you have a driver's expired license. So make sure those things are up to date and current, because you don't want unnecessary drama and headaches, because it's not just easy to get a driver's license. You can't just go in DMV and get it right away now. It has to be mailed off and sent to you. So make your life easy. Check those things. And it's usually due on your birthday. Whenever it expires, usually. Everyone that's purchasing a home needs to be present. If you have a spouse or a significant other or someone else is purchasing with you and you need a power of attorney, make sure you get those things ahead of time, because the lender has to approve those documents. You can't just say, at the last minute, I want so-and-so to sign. No. Can't do that. Has to be ahead of time. They have to approve it. And you will need to bring a certified check or wire the funds for the final amount. You cannot close and get your keys until they have the money, because everything has to, in essence, change hands. The deed is given to you and all those things. So, have to have that. So, timeline to financing a home. So, find a program. It depends on how long you want to analyze. Up to 2 weeks, you want to figure out what kind of program you want to do. Then pre-approval, up to 3 days. Underwriting to closing, up to 7 days, depending on the lender. Sometimes they can do it, within, 2-3 days. So it just depends on who you have. Sometimes underwriting could be longer. So timeline depends on the loan program you choose and your profile, and also how quickly you get those documents to the lender. So if you're driving, you feel like, I don't know where that document is. Well, it's going to take your loan a long time to close. So make sure you have what you need. So the quickest that I've seen for home financing to be done is 12 days. That's the quickest. It probably could be done in 10 days. That's pushing it, but that's the quickest that it can be done. But you've had everything done ahead of time. Everything was done. You don't have any hiccups, no drama. So that's the quickest. And remember, no closing can take place until you have your clear to close from the lender. So next steps are for you to schedule a buyer consultation with me. You can text me, you can send me an email, or you can scan the QR code on here. And if you are watching this webinar outside of the DC metro area, I have a network of agents throughout the U.S. that can assist you. Thank you so much for watching. And until the next video, I'm ReShawna Leaven with KW United.